Hello traders, you are welcome back to the Forex Geek channel, and in this video we are just going to quickly break down the D1 trading strategy. Okay, D1 standing for the daily time frame. Okay, and this is one of the most structured ways to approach the Forex market. All right, the daily chart is also known as the D1 time frame, like I mentioned, and it gives you a complete view of market direction without the noise, that clutters lower time frames. So on the D1 time frame, each candle represents one full day of trading. All right, which makes patterns clearer, levels stronger, and trends easier to follow. Okay, this time frame is especially powerful for traders who want a calm and disciplined approach. So let us quickly start with market structure. Okay, on the D1 chart, trends are well defined, as you can see, right? You'll see obvious higher highs and higher lows in an uptrend. The D1 time frame is quite a strong time frame, right? And if the trend is is really trending, right, you're going to see the pattern clear. Okay, it's quite hard compared to lower time frames to find noise, you know on the daily time frame. You hardly find noise on the daily time frame. The daily time frame is pretty straightforward, right? If you see a higher time frame and if you see a higher high and a higher low, just know that it's a bullish trend, right? If you see a series of higher highs and higher lows, it's a bullish trend. If you see a series of lower highs and lower lows, it's a bearish trend. And you will likely not see erratic price movements on the daily time frame. You will likely not see a lot of whipsaws, right? Whipsaws don't usually happen a lot on the daily time frame compared to the smaller time frames, right? Although the daily time frame is for swing traders, right? You cannot be trading on the daily time frame if you're a scalper or an intraday trader. Okay, now because daily candles take longer to form, market structure becomes much more reliable compared to fast moving charts. So recognizing this structure is the foundation of the D1 trading strategy. Next, let us look at support and resistance. All right, on the daily time frame, these zones carry more weight than they do on shorter charts, right? When price touches a daily level, reactions tend to be stronger and longer lasting. Okay, so by marking out key daily zones, you create a clear roadmap of where the market is likely to react. So this is one of the biggest strengths of trading on the D1. The levels you draw hold serious significance. Okay, so now let us move to the entries and exits. With the D1 trading strategy, entries are all about patience. Okay, you wait for the daily candle to close near a key support or resistance level, right? So once you see confirmation, whether it's a rejection wick or maybe an engulfing candle or a clear shift in structure, that is where your trade idea takes shape. Okay, exits are straightforward. You target the next major daily level. So yeah, keeping it simple helps avoid confusion and hesitation. Okay, another advantage of the D1 strategy is time management. Since each candle takes a full day to form, you don't have to watch the charts constantly. Many traders using the D1 trading strategy check the markets perhaps once or twice a day, right? They plan their trades and then let the market move without stress. So this reduces emotional trading and allows for a calmer routine. Finally, let us talk about building a trading routine with the D1, right? A common method is to start with the weekly chart, to understand the long-term direction. Now, in this particular example, we might be having a little bit of a conflict because the weekly chart is telling us that the trend is currently bullish. Well, it's not exactly a conflict per se. It's just that we have an ascending triangle. Yeah, it's just an ascending triangle pattern because even on the weekly chart, we can see that there is a notable resistance around here, right? And then you can see that we are actually having higher highs and higher lows. Although at some point we kind of had like sort of false breakout at the downside, but generally we are in a bullish trend. But price is now testing resistance, so that's giving us an ascending triangle pattern, right? So in this case, next thing to do is to actually watch out for a breakout. It's either we have a breakout to the upside or we have a breakout to the downside. It's pretty straightforward. Okay, so on the weekly chart, you can just come identify the prevailing trend, perhaps even mark your key levels on the weekly chart, and then you go back to the daily chart, right? So when you are coming back to the daily chart, you are coming down to plan your trades. So this higher time frame alignment makes your decisions stronger. Once your daily levels and entries are clear, you can hold trades with confidence, knowing they are based on the bigger picture. So to recap, the D1 chart makes trends and structure very clear. Okay, and daily support and resistance levels are strong and reliable. Entries and exits are based on patience and confirmation. Time management improves since you don't need to stare at your charts all day. So combining weekly and daily analysis creates a structured routine. Okay, so that is the complete breakdown of the D1 trading strategy. All right, if you found this guide helpful in any way, okay, just make sure to do me a favor and click that like button. Also subscribe to the channel so that you do not miss future strategy breakdowns and trading lessons. And if you think that this content is valuable in any way and you know someone who is going to need the content, just do well to share the video to them as well. Okay, thank you for watching and I look forward to seeing you in the next video. Happy trading.